a medical clinic that is Kajima, Muranga County.
Turn on camera.
Medical center, that is Muranga County.
Welcome, Kim, all the way from Muranga County. Thank you so much for being here. So one more, please.
Okay, so let me hold for just a minute.
Evans from Olive Link Healthcare. You'll hear a little bit more about Olive Link. They're also doing very well. They have a lot to share later on in the program today. Yeah. Somebody needs to introduce herself. Now that she's here.
Good morning. My name is Frida from Jamaica.
Regularly scheduled program. Good morning, everyone. Thank you for being here. We're in day two. Day two is a little bit different mode than day one. I'll explain in a second, but we're focusing on e-commerce and the digital economy today. If there's one thing I want to leave you with, and it's the first thing and the last thing, is that the conversation we're having today is a lot more than being about sending things to places using the internet. So what we're talking about is actually the reorganization of our economies and how we're going to do that using digital technology, and it cuts into virtually every sector of the economy. We're focusing a little bit more narrowly on the more tangible side of the economy, but the digital economy goes everywhere, from manufacturing to agriculture to shipment of small packages. It is fundamentally transforming economies all over the world. So the potential for transformative change is one of the reasons why we're focusing on this. And the potential for inclusion, allowing participants, even very small participants, to go global, is really something that's quite new. So that your ability to reach markets not only here in East Africa, but globally, is something that is possible if we get policy frameworks for the interaction of financial flows, telecommunications, and data, things that are the backbones of digital commerce and the digital economy. If we get them working between countries, this is essential. So this is about everything. And it's worth keeping that in mind, because it's going to be a wave that is transforming the world, and East Africa should be part of that. My name is Andrew Crosby. I'm Managing Director of ICTSD, and I'm really happy to be here. ICTSD, for those of you who weren't here yesterday, is what we call a think and do tank. So we engage people all over the world. We work as a network. We're nonpartisan. We don't prescribe policies. We are actually interacting in policy processes at the international, regional, and national levels to help empower people to identify their own policy options, help them identify the paths that are going to be most productive for them, not only for economic growth, but also for their sustainable development objectives. Our work in the digital economy area goes back several years, and we've worked on services for quite a long time, but the digital economy work grows specifically out of a project we call the E15 initiative, which was started a few years ago to help policymakers understand what would the future look like, what kinds of policies would you adopt in the future to really make the system work for sustainable development. Aside from digital economy, we went from a range of issues, from agriculture to industrial policy to innovation to WTO rules. I put these little flyers on your tables, so we're not loading you with paper, but this one it shows you how to access the E15 initiative, and it shows you some of the papers that are relevant to this area. But it's full of ideas, and I recommend them to you. We picked up on this track coming out of the E15 initiative, which was really providing recommendations for how policymakers could address digital economy issues, from the transport of small goods and how platforms work to the enabling of services sectors. And we picked up on this back in 2015 when the policy options were released, with a dialogue here in Nairobi, a series of dialogues actually, which I will also recommend to you. They were fascinating, and they are on our website at something we call the Trade and Development Symposium, and I can direct you to that as well. Our current work is focusing in two areas, or two or three areas. So we're helping Geneva delegates who are working on these issues, and I'll tell you more about that in our third session this morning. But we're helping them try to understand what are the options in front of them, and how can they resolve some of the tensions that are arising in those discussions. And some of those tensions actually arise because there is a dissonance or not a clear understanding between what national policy objectives are and what international policy objectives are. So the second track that we're working on is one that is in the regions, and it's trying to help regional policymakers and regulators understand where their interests are, and ultimately to try and form a better connection in this policy-making interface between what happens at national and regional level and what happens internationally. So that's sort of a background goal, and we're working along these two tracks in another rather immediate track, which is the WTO's ministerial conference that comes up in Argentina this year. The last one was in Nairobi. Next one will be in Argentina, and as you know, Amina Mohammed was a strong supporter. Your government of Kenya has been a strong supporter of that. But the issue around e-commerce and the issues around e-commerce are not entirely clear, and so those need to be resolved, and delegates in Geneva are working on those now. So the objective for us today is to sharpen your understanding around e-commerce and the digital economy, and to help you in your thinking process about what needs to happen here to make East Africa competitive and to enable you to achieve your other development objectives, and what can be done then in the international context. So it's aligning those three contexts. And what we're trying to do, and what we hope we help you do, is try and resolve some of those tensions that come up about what is the digital economy. First, basic questions, and then what can you do? What are the policies? Some of the work that we did yesterday, that heavy lifting around regulatory frameworks, this is where a lot of the action is in this area. But the first thing requires starting to identify where some of your interests are, and then it's how to work through those. So many of the people here have ideas and interests, so it's not about giving you ideas and interests, it's about can we help that alignment of process a little bit. So let me stop there. The order of business today is going to be to go from the national to regional and focus more closely on regional, and then to essentially do a brainstorming. And we have some fantastic people in the room. I'm not going to introduce them now, but we have some incredible resources in the room. We have some excellent research that we brought to this meeting, for this meeting. So I hope you find it interesting. As my colleague Deborah said the other day, feedback is what is essential for us, and we're ready to help continue if this is a useful process for you. So it's about digging in and understanding what's valuable for you. We're here to facilitate that discussion. So let me stop there. That's enough for me. And I pass it over to Ambassador Darlington Moape. Thank you.
Thank you, Andrew, and good morning, everybody. I trust that you had a restful evening. and you are fresh enough to tackle this very interesting subject matter. As Andrew has noted, this is a subject that is affecting almost every sector of trade. It is moving at such a fast pace, and we need to get to understand what are the implications for our economies, what are the opportunities that are available, and some of the challenges that we need to overcome in order to take advantage of this emerging trend and business opportunity. In order to start the discussion on this subject, I have with me two panelists, Kati Sominen from Next Trade Group from the US, and Alban Odiambo from Trademark East Africa, who will discuss the presentation by Kati. We'll basically be looking at the context in East Africa in terms of implications of e-commerce, of digital economy, challenges, opportunities, and then in the next session we'll then move to start to look at some of the institutional frameworks, some of the rules, regulations that could be put in place in order to embrace this trend and see how we can take advantage of it. So I invite Kati to open the discussion.
Great, thank you very much. Thanks, Andrew, and thank you, Ambassador. Andrew asked me to do the kind of honeymoon presentation, have a lot of fun before we start doing something heavier as we did yesterday. So hopefully I'll give you a little bit of flavor of what's going on with digitization and trade and where are the interlinkages. And we'll look at some pictures, and I'm sure a lot of you know a lot of this stuff, and I look forward very much to your comments as well. I'm rather new to Africa. I've done a lot of work in Latin America, Asia, Europe as well, but less in this region. So I think we'll see. There we go. All right, so as we've known and seen, international trade has kind of gone missing in the past number of years. 2012 to 2015, international trade really took a plunge from the prior levels of growth. And 2016 was, in fact, the first year when, in a long time, that trade grew at a lower pace than international economy. So trade has really kind of lived out its renaissance in the 1990s, 2000s, it seems. And we're very pessimistic, of course. There's a lot of media about a couple of trends. One is that international kind of largest economies are not growing necessarily so fast. US growth is projected to be quite lackluster as well in the coming years. So not much.
Sorry, to interrupt you, but the international growth you're talking about, is that worldwide or just in Africa?
All global, yeah. And a lot of the pictures that I'm showing are global, and that was really on purpose to show you what's going on elsewhere in the world, and then go and deepen on East Africa, particularly in the next presentation. So we know growth is not really picking up, and at the same time we have some wild cards. We don't know necessarily what's coming with the international policy environment. What we have seen is that protectionism, kind of creeping protectionism, has been there. There's been more protectionist measures that governments have introduced worldwide in the past couple of years than in the years prior. So some worrisome signals. But what is really growing in trade? A lot of these figures disguise wonderful trends in international trade. And one of the wonderful trends is e-commerce. This shows you B2C e-commerce. There's also B2B e-commerce, which is about 10 times as much as B2C. Both kind of domestic e-commerce in the blue bars and cross-border e-commerce. And the growth rates are staggering. 29% annual growth in cross-border e-commerce, 5 to 10 times faster than world trade in the next number of years. This is really a wonderful growth area. A lot of it is driven by China, United States, of course, advanced economies, Brazil of the emerging markets, but Africa is coming. Take a look. 2016, e-commerce in Africa, $1 billion, very incipient, right? Very small market still. 2025, 75 billion. 75 times growth in the next decade, essentially. By 2025, 50% of Africans are online, are spending much more than today on purchasing goods and services online. What's driving this? Well, internet use has, of course, gone up. In this region, we're looking at internet penetration rates of 2 to 3 times greater than just 2010. All countries, things are looking up very nicely. Another driver of, I would say, this e-commerce and coming e-commerce wave in Africa is so this is just internet usage rates. If we look at mobile, smartphone penetration, 30% in Africa writ large, 2016, 57% 2020. I actually met with some e-commerce companies yesterday, and they said that this is, in their view, an underestimation, that there's much more action there. But of course, there are some larger countries that are poor and don't necessarily have as many smartphones. But nonetheless, the growth is coming. And why does this matter for e-commerce? Well, first of all, there are 740 million new users, new netizens, basically, new people coming online by virtue of acquiring smartphone in the next 5 years alone. So 704 million new users in Africa, 1.6 billion in Asia Pacific. So it's growing globally, and it's growing very rapidly here as well. Why it matters is that Africans buy online on their mobile phones. You know this much better than I do, but that's really the way in which commerce is conducted, and as smartphone penetration grows, we would expect, right, that there's more and more and more online transaction. It's becoming more of a day-to-day way in which people transact and purchase and pay for things and so forth. At the same time, when we look at businesses in East Africa, businesses have also become more connected, right? More and more companies here have their own websites, are more visible to buyers in their domestic markets, perhaps also in other markets. And a lot of companies are using email to transact with suppliers and customers and so forth. So everybody is becoming more connected. One would expect that just by virtue of the gravity of connectivity, we're going to have more e-commerce activity and digital trade, right? More and more transactions happening online in this region. Nice developments as well. You know, M-Pesa, the story, terrific. E-commerce, of course, in this region is done cash on delivery, but perhaps over time, as people get more accustomed to doing e-commerce and there's more trust there, we will start moving to using more online payments like M-Pesa, also in e-commerce transactions. So what's the point? So great, wonderful, we're going to have a lot of transactions online, great, wonderful. Well, what's the point for trade? Very interesting. When we look at international trade trends and who participates in trade, it's been a fraction of businesses around the planet. You probably know this in Africa as well. Typically, less than 15% of companies in any one economy export. Only a handful of companies engage in trade. And it's a universal pattern. In the US, if you count generously, 5% of companies export. In many Asian markets, fewer than 20% of companies export, right? This is the Asian export miracle. It's driven by a handful of companies. Same here in Africa, 9.8% of companies in sub-Saharan Africa export. The rest sell in their domestic market only. Huge growth opportunity for e-commerce. Why? Let's look at eBay's data. We just looked at the share of SMEs that export is a sliver of all companies. But when we zoom in and just look at companies selling on eBay, which is of course the largest B2C platform basically in the world, 160 million users. When we look at eBay sellers, for instance in Thailand, 100% of them export. And not only do they export to 45 countries. On average, a developing country exporter exports to 2.6 countries, 2 to 3 markets. Very narrow. So maybe a couple of neighboring countries. Online, in every economy, and this is just Asia. eBay did this study for several countries, 10, 15 countries around the world, also South Africa, others, same trends. When you look at online sellers, practically all of them sell on export, particularly on eBay, which is a global platform, right? Globally visible to global buyers everywhere. So the odds are when you get on a platform like that, somebody will find you and that somebody is in a different country and they'll buy and make you an exporter. That's the typical pattern. And you become much more diversified than you would ever be able to in the offline world. This is a wonderful tool. This really revolutionized my thinking about the future of trade when I started to see these data coming out of eBay in 2013. Example. I'll give you an example, kind of overseas examples as well. I'm sure you know wonderful examples in Africa, and you could tell me, educate me much more about this. Company in Mexico sells kind of customized USB drives for, say, companies that want to give their employees their own USB drives or want to perhaps give Christmas presents to other companies or what have you, and just want to customize. So these guys were selling here in a little town near Mexico City. And about 10 years ago, they said, well, hey, I'm going to start just testing out what's going on online. Let's put an online store. Let's use Google AdWords. Let's invest $10 US and have Google AdWords campaign go in Mexico City, which is the capital. They did that, huge return on investment, got enormous amount of clients. They said, well, let's go big all over Latin America. They did the same thing, went on different online platforms, eBay, Mercado Libre, Alibaba, started to put their own online store, Twitter, Facebook, used every digital medium there was. By 2012, 5 years later, 60% of their revenue came from exports from different Latin American countries. And they got big buyers like Coca-Cola. Wonderful story. And these stories repeat themselves millions and millions upon times, globally. Whether it's India, whether it's here in Africa, still more incipient, but the opportunity is tremendous. And not only that, not only is it exports, when we look at more rigorous academic work on what does e-commerce and selling online do to companies, it's not only more trade. Trade generates productivity growth. So if we compare companies that are online, they have some online presence, maybe a website, but don't have an online store, don't buy online, don't transact online. Those are the blue bars. That's their labor productivity growth and productivity over time. Nice 2% productivity growth annually. But if they also create an online store and start selling online and really push their products, the productivity growth is 75 times greater than if they are just sitting online. So it's a great way for companies not only to grow by exporting, but actually grow more productive through different channels. The other mechanism, not only is it goods, obviously, it's trading services as well. And as disillusioning as those trade figures were in the beginning that I showed you, trading services has actually grown very nicely. 2015, trading services globally grew 5%. Trading goods, 0.3%. Right? So services trade is kind of a nice glimmer of hope in the world economy as well. Another example, how does that work? Indian company Freshdesk started 2008, two guys said, hey, we have a great idea for kind of cloud-based software to enable companies to do better customer service, right? So they created this platform, started to put their services online. Today, they have 800 employees. 8 years later, 800 employees selling to the largest brands, providing customer service experience software to Honda, Cisco, University of Pennsylvania, you name it. Great story. Who has heard of Upwork and Freelancer? Right, some of you. So there's an immense array now of online work platforms where any freelancer can just sign up and find jobs posted by companies all around the world. Upwork is the largest, perhaps, in the world. Freelancer is another one. TapTal, there's a number of others, different kind of segments. These guys, based in Uruguay, 2 people, 2008, said, hey, let's start using Upwork. We know something about IT. We can do web design. We can do some back-end work for apps and other things. So we're going to go start using, start logging in on Upwork, look at what international big companies or others are buying, what kinds of IT services they might require. They started to sell first of all, they got a client that was Scout, this is like a dating app, supposedly. So they did some IT work for this app. Then they did IT work for Kindara, which is a healthcare app, so people can monitor their health. So those guys did kind of the back office scrubbing for this app. And by 2016, they had 48 employees, had done 50,000 hours of work on Upwork for different kinds of clients around the world, and had made $1 million during that time. Wonderful growth story. Again, I'm sure these are stories that are repeating themselves bit by bit in Africa as well, but just give you a flavor of the potential there. By 2020, 540 million jobs created by online work, by all these online platforms. And of course, the government of Kenya has also created its own online work platform precisely to generate employment and do better matching between companies that need talent and people that have the talent to offer. This is a wonderful tool also for women. When we look at female employment in the world, women make up about 25% of the labor pool in developing countries, right? The rest is men. But when we look at women online, on Upwork and other platforms, or Elance, which is one of the companies that merged into Upwork, women make up 44% of that labor force. Why? It's easier, it's flexible, you don't need to have the old boys networks or what have you, and it's pretty low cost to just start doing it. You can spend time with your family. All these benefits kick in, and it's a wonderful tool for women to kind of, gender inclusiveness in trade as well. For women to essentially export different services, whether it's IT services or data services or architectural services or legal services, you name it. There are 2,700 occupations on Upwork alone that are being offered by contractors all around the world, whether it's Kenya or Ukraine or Bangladesh or Pakistan or where have you. And of course, this is not only a story about exporting. We're just looking at exports of goods and services, how internet enables those. But it's also enabling sourcing. In economies like you have in Africa, smaller economies, limited domestic supply sources, right, for companies and consumers to purchase products and services, e-commerce, again, has enabled a lot of purchasing from overseas. So I did work on Latin America for the Inter-American Development Bank, looking at how companies are using the internet to not only sell, but also to buy more goods and services for their inputs. And are they using the broader global supply pool, or are they using just their domestic market? And what we found is in different revenue categories of companies, for instance, in the below 5 million revenue category company, which is small business with some nice revenue already, 65% of those companies used the internet to purchase inputs from overseas, used it for cross-border purposes. In fact, 50% of companies used the internet to sell, but more than 60% used it to purchase, which is great. Latin American markets are the same, very small markets, very limited domestic supply. Imports provide a lot of competitiveness for companies that then tap them. So many benefits. Final thing I want to show of the kind of flows and how this connects to international trade. As you know, data has grown tremendously. You just look at the internet, 2005 versus today, and there's so much more stuff there. So that's just an illustration. And McKinsey did nice work measuring how much more data is there in the world, and they came to the conclusion that data has multiplied 45 times in the past 10 years. Just the flows of information across borders has gone up dramatically. And as you see, between Europe and Africa, much more data flowing than was the case in 2005. So what does that matter for us? Well, let's take TravelStart. Some of you may have used this, right? It's a South African online travel platform, also operational here in Kenya, as I understand it. So you can go and book hotels or flights or whatnot on TravelStart. TravelStart operates in a number of markets, so they said, hey, we're going to tap data on all these markets on people that are logging into our site, and we really want to analyze this. They used Amazon Web Services to get the data, distill it for them. You don't have to buy very expensive kind of data analyst teams or hardware or so forth. You just use Amazon or Salesforce or somebody. What happened? They used this data They gained operational cost savings of 43% and downtime savings of 25%. And these stories repeat themselves over and over and over. When little companies tap data, they become much more efficient, or get efficiency gains, basically. So, wonderful, right? Great stories, a lot of companies benefiting, productivity growth, inclusive trade, gender-driven trade, what have you. All these good things seem to be coming with digitization. So how do we make more of this? On the one hand, you might say, well, why should we? We're having all these wonderful trends. We're having more smartphones here. It seems like these little companies are just getting on eBay and then they're exporting around the world. So why should we even be talking about it in a policy forum like this? But here's the thing, is in a way, when you think about it, this is really an era of e-commerce 1.0, driven by a very handful of humanity. So 7.4 billion people are in the world, and about 5.2 have mobile phones. This has gone up though, so this data is probably a year and a half old or so. So the numbers are a little higher, but be that as it may, more or less these are the trends. 3.2 billion are online, have internet, right? So half of humanity, more or less, uses the internet. 1.1 billion have high-speed internet, or fixed broadband. So it's really a small segment of the population of the world that is driving this online economy and gaining from it. Who are those? They are the wealthier segments of the population, urban, young, male, and they are typically in developed countries, right? So imagine if we were to harness all these bubbles, not only the couple of circles there that remain. What are the challenges? Well, obviously, you looked at the growth of internet penetration in Africa, but it's still very, very low. If we look at this in the African context, just the connectivity is still very low compared to other economies, improving very quickly, which is wonderful, but just this kind of backbone and infrastructure is something that we got to get right in this region. And then when you think of it more broadly, kind of think of it as, as we think, I've come from the international trade background, and we always talk about enabling environment. What are the key components that a country needs to have in place in order to facilitate trade? And we used to have things like, well, customs regulations need to be conducive to trade, and we need to have some trade capacity in companies and so forth. These are all these buzzwords that we used to talk about for 20 years. But when you start thinking of the enabling environment for digital trade, it's a little different. There's still the same elements like logistics and trade facilitation when it comes to e-commerce parcels. But you have new things like online payment solutions, digital regulatory frameworks, the skills for entrepreneurs and just consumers to use online and tools and e-commerce in order to sell and purchase goods and services. Access to finance and business environment issues are key when you're talking about little companies, right? We're looking at a totally different set of players now with much more limited capabilities to participate in trade. So how do we help little companies to take advantage of these e-commerce platforms and others is really a critical question as well. So, to think about it holistically, and if one of these pieces goes bad, I think none of them really work well. So everything has to work nicely together. This is probably too little to see, but I did a kind of back of the envelope looking at East Africa compared to Western Europe and compared to the world in a number of these areas. And yes, there is room for improvement clearly, and this is just one way to kind of get at what are the key elements that we should be fixing, if you will, or improving in economies in order to facilitate digital trade. SMEs' adoption of e-commerce is still very low. So we're looking at these trends like, wow, so many more little companies are able to do trade now. Wonderful. But in the main, the uptake of SMEs of e-commerce and digital trade still very low. So if we look at, say, a small business in a lower middle income country, in the kind of orange bar there, like Kenya, I'd say is in that basket, about 18% of companies use e-commerce. This is, of course, a wonderful picture because you say, well, there's a lot of growth to be had. If we look at consumers, it's also oftentimes in emerging markets and developing countries still in single digits. the share of people that have actually purchased something online. So there's a lot of growth to be had, but there's a lot of training also that needs to happen with these small companies. And online platforms are doing a good share of it, but I would wager that there are a lot of opportunities for government also to help, for instance, through export promotion agencies. Latin American countries are pretty advanced in this already, and hopefully this is coming to Africa as well. Another set of challenges is the policy framework. And this is something that we'll be then discussing more in detail in the next couple of years, I'm sure. What I understand in the African context and East Africa is that these kind of thinking around the digital economy and policies here is now starting. There's thinking on data privacy issues, consumer protection, and other things. I did a survey from Latin American countries. I have a very similar one coming from for Africa, so stay tuned, it's coming out very soon. But we asked companies in Latin America that were selling online, cross-border, what are the key challenges that you're facing? And perhaps not surprisingly, they said, well, it's market access, it's logistics, it's customs procedures. So it's the old-fashioned trade problems that we've been struggling for a long time. Same here in Africa, of course, perhaps even magnified in the African context, given the challenges. But they also highlighted a number of kind of digital economy issues. Uncertain legal liability. If I'm an e-commerce platform or an online seller, and I get user reviews on my site, well, am I liable for those user reviews? This is really constraining Latin American companies from doing cross-border e-commerce. Because they may say, I'm an Argentine company, I have user reviews on my site, and then I put my site out in Brazil, and Brazilian government says that I'm liable for all this content on my site. So these kinds of little nuances are starting to really hit these companies that are doing online. Problems with online payments came out as an important barrier for companies to do cross-border e-commerce. Data privacy and data localization requirements. Interesting enough, because it typically isn't a very big problem in Latin America. I think it's because of the data privacy issues there, and some intellectual property right issues as well that are magnified online, of course, as well as for services online. So we're going to have to lead to a new kind of regulatory environment. A lot of countries around the world are revisiting or starting from scratch doing their regulations for the digital economy. And now is really a critical time to get this right. So these are some of the elements that we, of course, have to bear in mind and listen to businesses, what they encounter. I've heard all too many stories in Latin America where governments have just raced ahead, created regulations, and then e-commerce companies and businesses struggle to meet them or struggle with the compliance costs. So, public-private partnerships in kind of fashioning these rules are very critical as well. What would be the revenue gain for these Latin American companies if you just got rid of some of these challenges? Incredible revenue growth gain. On average, 50% in their home market, 65% in exports. Huge gains. So clearly these barriers matter and constrained trade. And if we got all these regulations right, trade logistics, customs procedures, we could have a really nice renaissance of world trade and renaissance of first-time renaissance of small business trade. So to conclude with some of the, kind of give you a couple of nuggets to think about, if you think of of course, the enabling environment, we need to think about internet connectivity, online payments, logistics, e-skills, taxation of small businesses, all these things. But if we're looking at these as trade policymakers, as some of you are, then we also want to think about all these different areas of trade that we've been looking at in the past number of years and rethink trade infrastructure, how to move kind of digital trade. No more is it just like getting big boxes on containers and about roads and ports and so forth. It's about facilitating trade in small parcels, helping small businesses move trade. It's about also taking barriers down in the digital economy, in the virtual world, if you will. Trade regulations, this is something that we'll be mapping. I'll show you a little bit what I'm up to as well. We'll be mapping more the regulations and the digital and kind of regulatory environment in different markets. Trade facilitation, in light of the changes of trade. No more is trade just, big box trade. It really is about small parcels. The amount of small parcels in international trade has grown like 73 times in the past 3 years alone. There's an enormous amount of packages going from one country to another. Basically peer-to-peer trade and business-to-business trade in very small items. So how do we facilitate this? How do we essentially free the trade of small businesses? There are a number of mechanisms, I'll highlight them in the paper, like increasing de minimis levels in different markets. Export promotion for SMEs to use e-commerce. We have wonderful examples, bit by bit, coming in Latin America, for instance, and Asia as well, of how export promotion agencies are helping SMEs grow through trade, grow through e-commerce, and export through e-commerce. So people are teaching bit by bit this, and I think public-private partnerships are critical here because we can leverage the knowledge of online platforms, e-commerce platforms that have basically been teaching companies how to do this, and now we can harness that very systematically and do export promotion and use export promotion offices to convene these companies and then have online platforms train them. That's really a win-win situation. Export credit agencies also need to rethink of their work in light of the need for small businesses engaging in trade to get microloans. No more do you need $1 million working capital loans from banks or buyer finance. You just need a small $20,000 working capital line, and there's some thinking perhaps in the paper as well on that. And then of course regional trade and integration to ensure the interoperability of regulations and just the technologies there, whether it's mobile frequencies and things like that, that create frictions in trade if they are not aligned among countries. And a lot of work, again, needs to be done there. And I would say in Africa, in the nuts and bolts of trade is the customs procedures, logistics, all of that that enables trade. As I've been talking to e-commerce platforms here, their strategies are practically exclusively market by market because they say that the cross-border e-commerce is so difficult still. And it's just so costly for entrepreneurs to engage in it. The markups are just so tremendous if you do it online and do it through the proper channels. A quick point, how to do this? If you're a policymaker, what I'm seeing globally, and not that I've done a kind of exhaustive mapping, but what you see more and more in different governments is interagency collaboration. So you get together with trade ministries, IT ministries, finance ministries, perhaps a couple of others, maybe agriculture or somebody, and you come together and you say, hey, how do we advance digital trade? Example, in Chile, they created precisely such a working group, also brought academia, private sector together and said, what are the priorities for Chile to create a digital economy and to advance digital trade? They said, we'll have 63 measures in different categories like connectivity, governance, economy, the consumer rights and things like that. And then they are having this wonderful website where they map where they are in executing each of these measures, who is responsible, which ministry is responsible for carrying them out and so forth. I think a wonderful model for other countries as well to do this. And they are aiming to do all these 63 measures implemented by 2020. So some of the timely activities I think that governments and private sector should be engaging in right now in light of what's going on is educating, first of all. I've seen a lot of lack of awareness still among particularly policymakers of the power of e-commerce. And really to educate them and show them some of these patterns that I was showing, I think is critical. Interagency working groups, again, no agency is able to do this alone. This is a complex thing. The enabling environment for digital trade requires everybody working hand in hand, and not only government, but critically private sector. I'm very glad that governments oftentimes realize that they don't know much what's going on in e-commerce, that they are taking a very humble approach to this, and private sector is stepping up in a lot of countries and advising governments. Here are the challenges that we see on the ground when companies are trying to do e-commerce domestically or cross-border. So these multi-stakeholder dialogues, I think, are very enlightening for all parties. And then you have tremendous opportunities for public-private partnerships, like helping SMEs, teaching them how to engage in e-commerce with online platforms and government teeing up some resources. Very good synergy there. A couple of things, and I'll finish with this, that I'm involved in, but perhaps some of you may want to somehow pitch in or want to join. We started with the United Nations, actually launched here in Nairobi during the UNCTAD ministerial, a new global initiative called E-Trade for All. And the whole idea is to bring together agencies, there are 20 agencies involved, and different governments that are supporting e-commerce development in developing countries. And there are already been quite significant resources committed by the UK, the Nordics, I believe Japan and Korea are stepping up now. United States is looking at this. So there's a global initiative that aims to kind of coordinate the support for developing countries for e-commerce capacity building. And that's really taking off. They have a website coming out. I was the kind of idea woman for that, and then we worked together with UNCTAD. Alongside that, I've been building business for e-trade development with private sector groups, global private sector. Large companies are involved, eBay, PayPal, Alibaba, others. Also Ringier from Africa, Burundi Shop, you name it. There are a number of players from this region. And the whole idea is to bring together the global ecosystem that supports e-commerce to provide information to E-Trade for All, governments, agencies, and others to help them understand how the private sector sees the priorities for e-commerce. Because we know what to do, right? We have a kitchen sink, 100 items that we could do. We kind of know, well, some of these reforms would be very good for e-commerce, but every country is different, and we can't do it all. So maybe private sector, we can help pinpoint what are the key issues that any one country should be working on, and also help countries ideate solutions. So that's really the purpose of our group. And there's 25 companies already from around the world involved, and we'll have more and more. So you're more than welcome to join. Associations as well are participating in this. And then there are other things going on. I'm running a survey on some of these bottlenecks to e-commerce in different countries. So I'll have more data coming out, but if somebody wants to take it or field it, please give me your cards and I'll send it along. And finally, the World Trade Organization has its Aid for Trade meeting, as you know, in 2017, now in July 2017, focused on connectivity. So there's more kind of global attention that if you want to join those meetings, I'm sure everybody is welcome to go. So that's on my part. Thank you very much for your attention. Really look forward to your comments.
Thank you, Kati, for that presentation. A lot of information, a lot of insight. It's tremendous eye-opener presentation. I now give floor to Alban to comment on Kati's presentation.
Thank you very much. That's a very insightful presentation, full of a lot of insights, and we can actually picture now where this region is vis-a-vis where things are going, whether we are catching up, we are being left behind, or whether as many things have happened before, we will probably leapfrog or something like that. So I just want to highlight a few things, and most of this will be from Trademark's perspective on actually how we look at the digital economy and particularly e-trade. So as clearly mentioned, I think from the presentation, you can clearly see one of the biggest challenges, particularly for micro, small, medium, and small and medium businesses, and probably another category that is even worse off, and it's a huge part of the economy that is growing in this region, and that is the informal sector. That really there are no real statistics about this, but in the region, probably it accounts as the leading probably employer grow in terms of growth, because the formal sector is not growing at the same pace as probably the number of people who are being churned out of education systems to get employment. So for example, probably every year 1 million Kenyans cross the age of 18. Probably that means every year we are having 1 million, 1.1 people getting into the job market, and there are no jobs. So definitely the informal sector is where most of them go. So some of the challenges that you see these sectors facing, or for example, why the sector is informal, you can actually see how a digital economy can actually transform that they don't need to be called informal. Probably they are informal because of the way we understand trade or the way we understand business and how business is regulated and the regulations that are there, that probably a better dispensation under context of, for example, e-commerce would actually be very liberating for some of these businesses, particularly in the informal sector. And I'll probably just focus on highlight a few things that Kati pointed out and some of the challenges that business face. So let's just look at companies that are trying to export. So our biggest exports in this region are agricultural-based exports. So those are goods. They face several challenges for the markets where they are going. First, there's the issue of their sheer size. So while in a domestic market, probably you'd be able to sell them in small parcels, small quantities. The export market would demand large volumes of those products. But there's a way of getting through that if, let's say, e-trade works very well. So you're looking at these businesses, looking at their downstream activities, and you're looking at their upstream activities. You're able to see how e-commerce can actually address some of those challenges. What we've found out is, for example, in this region, when it comes to agricultural exports, it's the big companies that do the exports. Because number one, they have deep pockets, they have the resources to actually go through the jungle of documentary and border compliance, logistical coordination, which is a very costly effort in this region because logistics is quite poor in this region. And also they have the ability of having consistency. So the markets require consistency in terms of quality, consistency in terms of the supplies, quantities. So as a buyer abroad, I want to be ensured that if I'm dealing with a specific exporter from this region, when I place an order of X amount, it will always be met. And that's a challenge for small businesses. So what you find is a lot of very good businesses, particularly medium-sized businesses, are unable to export. So what do? In the agricultural sector, they are outgrowers of the big companies. So what they do is they just make the decision and say, well, we will supply the big company and they will sell. So of course that becomes the business model that they adopt because they can't go through this jungle of how to do this. But you can see how a digital framework can actually change that for them, and suddenly someone who is unable to export becomes an exporter. Size becomes a non-issue for them. Ability to reach those markets, accessing those markets, doesn't become an issue for them because there are frameworks that have been set in place that helps them to do this. And most of them are actually waiting for opportunities or for the government and probably stakeholders to actually come together and come up with frameworks that are doing this. So like in trademark, this is some of the frameworks we are trying to support in this region to see how that changes for some of the key sectors that are really important that can grow in this region in terms of that. So how do we address some of these challenges like logistical coordination, customs or documentary border compliance, issues around consistency in quality and quantity of supplies to these markets? How do we help small businesses or informal businesses actually do this? One clear way, and I think that's what Kati was actually pointing out in her presentation, is basically that what you're actually looking at is the digital world removes a lot of these barriers in a very quick way and in a very easy way. So what seems unsurmountable probably 3 years ago, we no longer think about it anymore. We take it for granted, but probably you flash back maybe 5 years ago, there are certain things we couldn't do. So for example, maybe 5 years ago, if I had to send money to my grandmother in the village, I would have to go through a very long process, probably go to a post office, queue for maybe 1 hour, get a money order done, try ways of getting in touch, maybe somebody who will be traveling, going home, trying to figure out who that person is, send them a message and tell them to tell my grandmother the money is in the post office, probably in 4 or 5 days, she would have to go there and queue. Maybe this person forgets. So by the time my grandmother gets the money, probably they have the seed preparation time for whatever she needed to plant has already passed. And maybe she's cursing me for being a very bad grandson. But that has changed because now with a digital platform, all I do is I just send her money and she has the money. And it is just as instant as that. So you can see how that has transformed. So just imagine that kind of situation for a business that is operating here probably in Nairobi or in some rural area here that has produce or products and they want to access a market. And all they want to do is to ensure that this product moves to where it's supposed to go. And if we have the right logistical coordination platforms built, access to market, that these people know what people out there can know what they have, what it looks like, how much it costs, and all this information is available, and there's a trust mechanism that enables them to trust that they will be paid. You can actually see how rural Africa can change, because this will transform so many things. So it will no longer be a wealthy elite, urbanized, well-educated, young that do this. You can even envision an old woman in the village doing this, participating in trade in a big way, because that is what technology does. And one of the key trends that emerges is that we have lived with technology, and some of us who are involved in the ICT sector, we sort of get into this environment where we think of ICT for its own end's sake, so technology for its own end. So you end up getting to develop sophisticated things. So you get involved in what we'd call a more solutionism approach towards technology. But the real thing is technology should be invisible, because when it becomes invisible, then you can envision an entire population using it. It doesn't discriminate whether you are a woman, a man, 70 years old, 15 years old. It doesn't matter because it is invisible. It is part and parcel of everyone's life, and therefore it automatically flows. And I think the digital economy is what is going to enable that inclusion of people who, under the current frameworks, have been left out. And I think the biggest challenge we have, and I think just to conclude, and I think that came out clearly from Kati's presentation, is number one, how do we envision that future? Probably it's not even a future of 10 years, it's probably a future of a couple of months, because things just change so fast. So it's a future, and therefore there's that urgency. So how fast do we move? Because things are changing, the world is moving in a certain direction. Few people are benefiting out of this, many are being left out. And if this trend continues and nothing is addressed, then definitely there will be bigger problems that will emerge. Like one of the problems that is clearly emerging is, and I think that's the flip side of if participation and inclusion doesn't take place, is we will end up having organizations that are what we would call what happened during the economic crisis or in 2009, 2008, of too big to collapse. So too big banks that people said, well, we just can't let this bank collapse. Well, capitalism dictates that it should collapse, but we say, well, some sort of form of social welfare for a business, and we say, no, it can't be let to collapse. So probably we are heading that direction, because when you look at it is, for example, in Kenya, so in the traditional business, if you looked at a market, let's say a manufacturing sector, so let me use for purposes of just an example, motor vehicles. So if you look at the motor vehicle sector, you will have a number one, probably Toyota globally, you'll have a number two, and you'll have a number three, and probably they sort of compete, and there's some sort of way that market is structured. So Toyota probably will control maybe 45% of the market. Number two maybe will have half that number, and so on and so forth. When it comes to the digital world, the way things are moving, and with a lot of trends that are happening, is the winner takes it all. That's exactly what is happening. So M-Pesa in Kenya, well, no mobile company can compete with that. So definitely that's what it is. You even go to social media, that's what you're looking at. So who's competing with Facebook, or who's competing with LinkedIn? They are competitors, yes, but in terms of what they will be competing, it's quite marginal. They are not significant players. So the issue we need to look at, particularly for this region, is exactly that. How do we then come up with frameworks, whether they are legal frameworks, technical frameworks, that actually will drive us towards the digital economy becoming inclusive, rather than it ending up being dominated by a few people who then become excessively rich and also control the resources that are there, and therefore they become too big to fall, or too big to be let, or too big to be controlled. So that's very key, I think, maybe a forum like this to look at. So what are the legal issues around some of those issues? What kind of frameworks are we talking about? Real things that will actually change the lives of people, particularly in this region. The examples she's given are really real examples of small businesses that then, through their own creativity and innovation, end up accessing huge markets that they never thought about before. So how are we able to create not just the legal frameworks, but also the incentives and also the sensitization frameworks that will enable small businesses in this region, informal businesses in this region, then to move to that level, whereby when they're thinking of their competition, they're not thinking of the guy next door. They're not thinking, I'm competing with a cross-border trader who's doing X, Y, Z, but actually my competition exists in a global market. That actually I'm competing with companies or with informal businesses in America, in Japan, in South Africa. So that opens up their mind in terms of what that business presents, what kind of potential it has. And you can see driving that digital economy is that big thing, which is access to information, which I think it's the other thing she pointed out to. So frameworks that give people access to information, real information that they can now make business decisions that make a difference to them. This region is quite poor in that. We are way behind in terms, there are laws that have been enacted that reads very well, you can access information, but the channels, the means, the infrastructure for doing that does not exist. So how do we enable then this to happen, that actually if we have an act or a law that says citizens have a right to public information and they can apply for it and get it. So what is the mechanism that ensures that they can actually get it conveniently, in an affordable manner, in an efficient and effective way that actually helps them make those business decisions? And I think if we are able to look at how we address those issues, the legal sides of things, the policy frameworks, we look also on the infrastructure side of things, the hard part of it, particularly logistics. So logistics for small business, how does that play out and what is required to make that happen? And then access to information that then helps our businesses to think big, that actually they're looking at a bigger market, they're looking at bigger competition, they're looking at, so that they're able to understand what they're doing and they're able then to take opportunities when they come, they're able to see the threats when they come, and threats don't appear on their doorstep and they get shocked. So for example, like what Uber has done and what shocked taxi companies or taxi players, for example, in this market or in other markets of the world, because they were not aware who they were competing with. So when it arrived, it was too late. And what happens is people get shocked, probably social unrest takes place. There's a lot of disruption that happens that no one is prepared about. But if we're able to facilitate and support frameworks of this kind, then we're able to see how the digital economy then becomes inclusive for everyone. Because the threat is, if that's not done, it will be the same story where it becomes a prerogative of a few people and everyone else is left behind. Thank you.
Thank you very much, Urban. And I think that there's you know, a body of work that still needs to be done. I mean, the emergence of this sort of means of trade requires some order. I mean, you can't just, you know, let things continue to happen without having frameworks, without having some rules, because there's a lot of, as Katie has said, there's a lot of data that is flowing across the globe. There has to be some confidence that when I give my information out, that information is safe, or when I'm making payments across these digital platforms, my payments are safe, my accounts are safe. How do I preserve my privacy in these transactions? So that has to be, invite some sort of rules and regulation. How do we deal with the issue of data localization? And how do we structure issues of tariffs in terms of facilitating the small parcels? Because most of this trade, I mean, if I want to buy just a pair of shoes from China, you know, how do you structure tariffs around those small parcels? So I think that in order for us to keep momentum on this discussion and to give time for us to open the floor and have you know, interactive discussion, I'll invite Henrik to come over and come and talk about the issue of regulation and framework around facilitating digital trade. And then after that, we can then engage into some you know, interactive discussion. Those that are pressed for some caffeine, just walk out and get your coffee and come back and join the discussion. But don't walk out en masse. Enrique.
Good morning, everyone. So my name is Henrik Johnströmer. I'm with the Law and Development Partnership. So I'm a colleague of Julia, whom you got to know yesterday. And yeah, the Law and Development Partnership is a consultancy firm providing strategic advice and technical assistance to donors and developing country governments, mainly in trade and development and also justice and security reform. And we have worked quite a lot with trademark the past years on the trade side. So I will spend the next 15 minutes or so talking about the digital regulation and enabling environment in East Africa. And basically, I'll provide an overview of East Africa's digital economy, look at internet use both among people and firms, and also some of the important sectors that already been covered, so I won't go into great detail. And then, secondly, look at the regulatory and business environment issues that face the, I shouldn't say sector, because it's not a sector, it's digital technologies are increasingly used in all sectors of the economy, So what is holding back the further use and further growth of this use? And lastly, I'll talk about what the policy implications are for these. But before I start, I just want to explain what I mean by digital trade. I define digital trade through these two categories. Firstly, it's what Kathy has been talking a lot about, this e-enabled trade and e-commerce. So goods and services that they are produced the same way as before, but they are purchased, they are advertised online, but then they are delivered offline. Secondly, it's what we call digital-only trade, where purchase and delivery of goods and services are carried out online or through digital technologies. And to put this, just to show what kind of businesses that fall under each. So this is the first category. Here is the likes of eBay or Amazon. When it comes to services, it's about e-banking, BPOs or business processes outsourcing, online travel and ticket booking, for example. And then digital-only trade. So goods, it's digital goods. It's not actually goods, it's services, but it's things that used to be goods. So, for example, a book is now an e-book that can be sold online. Software, music, videos that can be streamed online. And then services that are delivered online can be IT outsourcing, cloud-based services, and software. And to put this in an East African context, in this category we have, in Kenya, for example, the OLX, and in Tanzania, Inauswa, sorry for my pronunciation if it's wrong, e-commerce platforms that allows buyers and sellers to sell and buy goods. And I know Inauswa, for example, they allow informal businesses to register on the platform and sell goods. Also, Jumia Food, where you can buy food, order food online, but it's of course delivered offline, not online. Some East African services companies, Equity Bank, provide e-banking online. Rwanda Air, also Kenya Airways, allow booking of tickets online. Jumia Travel, the same. Property 24 in real estate and property renting. And digital-only trade with some East African firms, Mdundu, I think is Tanzanian. No, Kenyan actually. So that's music streaming. And they, I know, have 6,000 artists, East African artists signed up on this platform, and around 60,000 monthly unique visitors. And also app developing companies. There's growing app development and software development sector here in Kenya, especially in Nairobi. This company is one of those. Services, again, M-Pesa, I don't have to talk more about that and how big this sector is and been growing in East Africa. And also microfinance companies that use M-Pesa services to provide loans to small informal businesses and individuals. So there's a lot of companies in various sectors in East Africa that benefit from this development in technology. And this has really been happening thanks to the growing use of mobile phone and internet access. So we can here see a comparison between Kenya, Uganda, Tanzania, Rwanda, Burundi. Kenya is on top with 80% of people having a mobile phone and 46% having internet access. Countries like Tanzania, Rwanda, Burundi are much lower, but at the same time, the figures have been growing rapidly the past 5 years. At the same time, the access to fixed internet and broadband internet is very low in the region. Overall in East Africa, only 0.5% of the population have access to fixed internet, and only 0.02% have access to broadband internet. And this is, of course, holding back the further development, but I'll get back to them. Looking at firms, East African firms' access to internet, this study from the World Bank compared Tanzania, Uganda, and Kenya, and it shows, first of all, that Kenya is well on top. 72% of those firms that use computers regularly have access to internet, compared to less than a quarter in Tanzania and Uganda. And in all three countries, the percentage is more or less the same between manufacturing and services. But, and this is quite interesting, and colleagues from Trademark might find this interesting, looking at specific subsectors and their use of internet. For example, in Tanzania, transport, the subsector of transport, have a 46% use compared to only 13% in textiles, or 24% in retail, for example. In Kenya, the same percentages are 93% in transport and 80% in textiles. And then looking at firms' use of e-commerce in the same countries. Across all three countries, over 50% of those firms that have internet connection either purchase or sell online. It's quite telling. And it's, again, higher in Kenya, but still high in Uganda overall. And in Tanzania and Uganda, the manufacturing firms both purchase and sell online, sell more online, while Kenya, it's the opposite is true. So quite interesting figures. So, how does the regulatory and business environment look like? Before going into the specific issues, I think it's important to say that a lot of progress have been made on the policy and regulatory level in East Africa. I would say East Africa is the most advanced regional group in Africa when it comes to harmonizing and liberalizing e-commerce and cybersecurity legislation. And here's some of the key milestones. In 2006, the EAC Council of Ministers adopted the EAC Regional E-Government Program. 1 year later, with the support from UNCTAD, a task force on cyber laws was launched. And then, the following 5 or 6 years or so, several e-commerce legislation has been adopted by individual countries based on this, this initiative. So, for example, in 2010, Kenya adopted the Electronic Transaction Bill, and then this was launched in several other countries, so Uganda, Tanzania, and Rwanda. And also, in 2016, Kenya, Rwanda, and Uganda signed something called the One Area Network Agreement, which will help provide, support cross-border telecommunication and mobile money transfer across borders. So, a lot of positive steps have been made, but several policy and regulatory issues and barriers still exist. And a good way of comparing the different countries is this World Economic Forum Network Readiness Index, which looks at how well countries exploit the opportunities created by ITC. And overall, Kenya and Rwanda are on top. They are ranked 86 and 80 globally, which is quite good. And looking specifically at political and regulatory environment, Rwanda is well on top at 5.4, and where 7 is the top, is the maximum. And this is mainly because of the overall good business enabling environment in Rwanda, combined with a number of government initiatives made to promote ICT. So looking at the specific barriers to digital trade in East Africa, I categorize these according to the two categories I presented in the beginning. So e-commerce or e-enabled trade, and then digital-only trade. So barriers to e-commerce specifically. Well, first of all, local establishment requirements. These are laws that require firms that sell goods or services directly to a market to have a local presence. And this, of course, is a barrier to e-commerce, because the whole point of e-commerce is that you don't have to be in the country where you sell and provide goods. And I would say all EAC countries have, to various extents, local establishment requirements. So this is a barrier. Secondly, physical infrastructure and logistics, which Kati and Alban already touched upon. This is, of course, a barrier to all cross-border trade, but also e-commerce. Although e-commerce firms sell goods online, they need to be transported, so the last mile delivery of goods still require good roads, efficient ports, and logistics. And a lot of progress have been made in the EAC by the support of trademark, including, so to improve the physical infrastructure. But a lot of barriers still remain, and these need to be addressed to allow e-commerce to grow. And a related problem to that is also the lack of proper street names and signs, especially in rural areas in East Africa. I think overall, a figure I read, less than 1% of households in East Africa have home delivery of parcels. And I think 45% rely on PO box, so you have to go to the post office to pick up a parcel. And this is, of course, a problem for e-commerce firms and consumers, because it will make it more expensive and time-consuming to get the goods you need. Lastly, tariff, non-tariff barriers and customs procedures. General problem affecting all goods trade, but it is more problematic for e-commerce firms. Number one, these firms are usually quite small in size, so they don't have as much resources to find out about all the legal requirements related to customs and tariffs. Number two, they send small parcels instead of bulk and cargo. And number three, they usually export to a large number of markets at the same time, which makes them, they have to comply with several different regulations at the same time. When it comes to barriers to digital-only trade, data protection regulation, this regulation is needed. It's, countries need them to protect the use of personal data and other sensitive data. So we're not saying that they should be removed. The problem is that they can be overly burdensome for businesses, and when the regulation differ between different countries, it's a problem for businesses to comply. Secondly, restrictions on cross-border data flows, already been touched upon. Also regulation on e-signatures and e-contracts is an issue when it comes to digital-only trade. And then lastly, barriers that affect all categories of digital trade. The digital infrastructure. So access to high speed and affordable internet is a key issue for all digital trade. There's one case study that I cite in this paper. It's a Kenyan firm. They provide business processes outsourcing, so data processing and documentation, storage, etc. 95% of the customers are international. The thing is, they mainly do business as a subcontractor, and they want to do more as a prime contractor. They want to do business directly with the clients. But because the internet is too slow and too expensive, they're not allowed to do that. So slow and expensive internet is actually a barrier to East African firms to be international competitive. Secondly, skilled labor in the ICT sector, so computer engineering, software developers, etc. It's an issue. Restrictions on foreign investment and ownership in the ICT sector is an issue. Telecommunication is a sector that's been liberalized in the EAC. It's one of the most liberalized sectors under the Common Market Protocol. At the same time, barriers still exist, and this is one barrier that could prevent foreign direct investments in ICT and telecom. Also, international payment mechanisms. For example, Amazon, they require companies that do business on the platform to have a bank account in one limited number of banks that are approved by Amazon. None of them are in East Africa. So no East African firms can do business on the Amazon platform because of this. So what are the policy implications? What can governments, what can the EAC institutions do? Because, as I've shown, the barriers are on so many different levels, different policies on different levels, of course, arise. Firstly, for all forms of digital trade, improvements in both the offline and online infrastructure is important. So investments in roads and ports, more streamlined logistics and customs procedures, but also investments in the digital infrastructure, so more affordable and more access in more areas to high-speed internet. Secondly, for e-commerce in goods and services, tariffs and non-tariff barriers, especially those that impact e-commerce goods, need to be addressed. So, for example, lowering the minimum threshold for duty-free customs would benefit e-commerce goods because they're usually small parcels. That's already been touched on. Secondly, regulation that affects the right for customers to return goods if it's defected or if you change your mind. So making those return goods customs free would benefit e-commerce goods. Thirdly, to further liberalize and harmonize regulation that affect trade in services, because the majority of barriers that I've gone through are actually trade and services barriers. It includes local establishment requirement, restrictions on foreign direct investments in ICT, limits on cross-border data flows. These are all trade and services barriers. And as such, they fall under the EAC Common Market Protocol. And a lot of progress have been made in the EAC to liberalize services, but more needs to be done. And governments, I think, should identify what are the specific issues affecting e-commerce in my country and how can harmonization and liberalization help alleviate those barriers. And then lastly, the EAC needs to continue the positive work and positive steps that have already been made in harmonizing privacy and cybersecurity legislation. And that's it, but I would love to hear more from you. I know there's a lot of businesses and business associations here that know much more about the issues, and also governments from Telecom Authority from Kenya, I know. So please share your comments and views. Thank you.
Thank you, Henrik. I would invite you to come and join us here so that we can then interact with our colleagues from the floor. I now open the floor for comments, questions to the panel, or any contribution you may wish to make on this subject matter. The floor is open. A colleague from the front there, then secondly on my right. Please go ahead. Introduce yourself and then make your comment.
Good morning, and I would like to first thank the presenters. My name is Happy Mukama. I'm a trade law expert. And my first question goes to Kati. So as much as we've made good strides in e-commerce, but I've realized that e-commerce in one way has to go hand in hand with e-government. Because if you need to transact business, in cases of investment promotion, some investors do need a hand from the government. I'll give a scenario. If I come as an investor and I need maybe a construction permit, I don't need to avoid these hassles of going back and forth to the government. I at least need a platform where I can apply online, get a construction permit, and then I'm up and running. The same thing with company registration. So how best can we can e-government go hand in hand with e-commerce in terms of investment promotion? Because you can't detach the two. I also have a clarification again, which Kati mentioned on mobile phone data penetration. You know, in Africa, most of us are fond of using like 3 different lines. You find someone has a line for Airtel, Safaricom. So in terms of data correction, how do you code this data? Because this is a single person who is using 3 different lines. And in terms of data correction, it could be you could think that these are 3 different people. Yes, it is a single person using 3 different lines. So my other question goes to Henrik, and Ambassador Hadlington did mention something about it. The safety of our data, or maybe whatever we transact using e-commerce. And here I'll give a specific example on copyright infringement through the internet. Some publishing companies have been reluctant to sell their publication through internet just because the moment you send, it is hacked in the midst. So it is a big challenge we're facing as well on how can the regulatory environment work on this to cover this. I know this is a global threat, not only for Africa, but on a global threat. So how can the regulatory framework address this to go with? So another I think is a clarification. I don't know if it can be answered by Kati. You know that the WTO Services Waiver, which has been extended to less developed countries, and to me, I think most LDCs have not utilized this waiver, this services waiver, up to now. And I think ICT through e-commerce can be a good opportunity for LDCs to exploit this, because apparently the way e-commerce works through ICT, I think both countries can use this WTO services waiver to transact their business with developed countries. Thank you.
Thank you very much. I'll take another contribution from gentleman behind you, and then you.
My name is Edward Kusawa from Academia. I just want to ask one question to Katie. What do you think is the role of cryptocurrency in e-commerce? We have new currencies like Palladium and so on and so forth. What is the role of these cryptocurrencies? And are we seeing people moving into cryptocurrency to enable e-commerce? Or how do you look at that?
Go ahead.
Okay, thank you. My name is James Jero from Communication Authority of Kenya. I have 2 comments, and I think they touch on both presentations. One of them is that, in my understanding, as we look at trade, the most important thing is to ensure that we have movement of goods from point A to point B. And as we look at digitization, then we are looking at how we can be able to use ICT to be able to facilitate or make it easier for us to move the goods and services from point A to point B. So from the presentations, I think what has come out is that ICT, through digitization, we've been able to facilitate the payment aspect of it. And we've also been able to bring both the seller and the buyer, or bring the market closer to the people. But we also now need to ask ourselves, once I've done the payments, once I've brought the seller and the buyer together, and they have been able to make contact, we need now to look at how do we finalize the process of having train facilitated to have goods delivered from Brazil to Kenya, from Kenya to Rwanda. What are the things which, and that's what the traditional trade has always been looking at, the issues of custom. I think Enrique has mentioned on the barriers to trade, quite a number of them have been identified. How do we now have this digital economy being able to facilitate and reduce those barriers which have been identified, so that we can be able to ensure that once you've brought the customers and the producers together, then you are able to have the goods reach the designated region. The other thing is that the real sector will still have to continue producing. So again, we also need to look at, under the digital economy, how do we ensure that if there is a farm, an SME which is producing, or an agricultural farm which is producing in Rwanda, how do we utilize ICT to facilitate these guys to be able to reduce the cost of production? I remember Kati did talk of the total productivity factor coming down when we embrace ICT, but how are we using that so that the producer can be able to reduce their costs? Finally, in terms of penetration, and I think the question which has just been asked is very clear. We're seeing a lot of usage of internet, and our usage is mainly on mobile and not computers. That's very true, and the data, I think, it did show that. But my challenge is that if you look at the uptake of the smartphones, and especially in the developing countries, the smartphone devices which we are having are counterfeit smartphones. Most of them, you did mention that we have 1, 2, 3 gadgets, but if you look at those smartphones, they might not be able to do as much in terms of security, in terms of fraud. You cannot be able to detect because they are not original smartphones. So as we look at this digital, we also need to look at how do we ensure that counterfeit products are not introduced within the market. Thank you.
Thank you. I'll request...
Sorry, can I just jump on that one? Because
Yeah,
I think mine is a good segue to his comment.
Thank you.
I wanted to ask from Kathy and Henrik, the next big thing that's coming is blockchain technology. Would you want to just unpack that further for the audience, and how it impacts now the real economy, and you're able to now, trade more digitally using blockchain? And what do you think is the horizon for blockchain to this part of the world?
I think just to comment on the issue of counterfeit devices, mobile devices that are coming from countries that are bringing substandard. I think those mobile devices operate on softwares that are actually developed by telecommunication companies. So if you're running a Safaricom line, I think the security and solutions around Safaricom rather than on those mobile devices.
Thank you. Let's allow presenters to react to the issues that have been raised. The first one is how e-government can facilitate e-commerce. I'll start with Kati to respond to some of the issues that have been raised. E-government and then data collection, where people use a number of telephone networks, and safety of data. I'll give Henrik to deal with that.
Thanks so much. Wonderful comments. We could clearly spend the next 2 days in here speaking about this. Well, you know, on the investment promotion specifically, I guess kind of more generally what I'm seeing out there, not on this issue specifically, but I'm starting to realize that it's a big one here in this region. But in general on the e-government, you know, when I look at some of the survey data and some of the stuff that's emerging already from Africa to on the surveys, it really is about the doing business, the business environment is critical for this. And what companies are complaining about when they complain, you know, about how difficult it is to do e-commerce, it's not necessarily the e-commerce specific issues. It is really, it's business licensing, taxation, access to finance, registration as a business, all the nuts and bolts issues that small companies have to deal with when they engage in business, whether off or online. And it clearly affects the businesses that are selling online as well, which is interesting. And some of the bigger players that I've been working with, like PayPal, they're really picking that up as well, seeing that this is a critical issue for the digital economy to function. And so how you can facilitate this is by e-government and enabling small businesses to, you know, have easier time doing all these things like taxes and registering and so forth. And I would imagine that some of these taxes that brick and mortar companies have to take on if they have a storefront or what have you, those can kind of go away in the digital economy as well. So in a way it can further, digitization can further businesses' formality perhaps, or at least their registration. I don't know, but my sense is that this could be a possibility. But clearly, you know, e-government would really help in this regard. And I was looking at the case of Chile that I was pointing out. They've actually created something called Entrepreneur's Desk, where they put on one single platform all the things that a company has to do, a small business, in terms of registration, taxation, all the certificates, licenses, everything is in one portal, as I understand it, in one place, digitally available. So you just go in one place and you're done with all this paperwork there. And something like that I think would be very powerful in this. On the mobile phone, how they measure this, the data I was showing is that, I think we showed a little different data. He was showing mobile, I was showing kind of smartphone, so the rates are a little lower. But when you have multiple mobile phones, I think it's kind of counted that, you know, you could have a penetration, mobile penetration rates of 120% if, you know, if a person carries 2 or 3. That's my understanding. When you look at some of these data, you know, Belgium has something like 110% mobile penetration. Should I go in a couple of these other areas as well? The Bitcoin question is a really good one. On paper, it's perfect, right? It's the lowest cost way in which you can do payments online. It's lower than what we use in the US a lot with PayPal. M-Pesa, I don't know what the costs are, but you can basically use Bitcoin and transact cross-border, and it's 1% fee on top of that transaction. So it's a wonderful tool for small businesses on paper. But when it comes to some of the infrastructure or security issues, I think we're still not there quite. And even if we're there with technology or blockchain that underlies Bitcoin, as you know, the network has to be created. And I'm not sure that even largest financial services entities like big banks are there yet in terms of getting everybody in the network, because the technology is not the price, the network is. Who has the network? It's like Uber, then you're king. My understanding is that some of the largest banks in the US have come together and said, hey, we have the network, let's work together and let's sort this out and create basically the blockchain platform and start creating the network for it, because that's what it turns on, right? So I guess those are some of the issues that will have to be sorted out, but clearly it's wonderful because you get rid of foreign exchange costs, you get rid of all these things, and you don't have to have credit cards either. So it's a wonderful, I'm a big fan, but you know, it seems like for it to come reality, like Bitcoin will be the medium of exchange in e-commerce, it's still a little off as I observe, in part because the bigger financial institutions are moving slowly on that. I don't know, just a couple on the other issues on the physical movement. This is exactly this wonderful comment that you made on e-commerce platforms bringing the buyers and sellers together, providing the visibility that for centuries has curtailed trade, right? It really is the little companies far apart, not visible to one another, don't know of each other, can engage in trade. E-commerce platforms change that. We can see companies all around the planet now, what they're selling, we can see user reviews on them, we can see everything. It's wonderful. So it really reduces the distance in trade and payments and so forth to the same thing, but we're still left with the physical challenges. And I just would tee up a couple of ideas there. One is that, you know, a lot of the small business e-commerce is low-value items. And if you start collecting customs duties and taxes on that, you almost, it's net, it's a negative basically for your revenue collection, because the collection alone takes more resources than what you're going to get from a little parcel that costs $50 or something. And you're starting to collect revenue on that and inspect it and do all the paperwork, you're actually losing money as a customs. And you're certainly losing money as an economy, because your consumers and companies are now paying a markup on those imports. So I think raising the de minimis levels, the ceiling on below which goods enter duty and tax-free is a great thing. And perhaps as from companies in your regions or governments could also propose to some of the advanced economies like Canada and the Europeans that have very low de minimis values, that, hey, why not as a tool for development and small business development in this region, raise your de minimis levels like the United States did from $200 to $800 last year. Great global public good for little companies in Africa or Latin America to export to the US market. Now they can sell their products, $799 product, into duty and tax-free to the US market. So why not Canada? De minimis is like $20 or something. European Union is like $150, still very low. So if we could get those levels up, I think there could be something there. The other is to kind of rethink the trusted trader programs and authorized economic operator programs, whereby companies, mid-sized companies, large companies have been able to register and say, well, I comply with certain security regulations, so fast-track my trade through customs. I get just easier processes because I'm a trusted trader. I do everything by the law. I don't send counterfeit products or drugs or what have you. And why not do this for small businesses as well now? And perhaps leverage technology for that to gain greater visibility into their trade patterns. E-commerce platforms have all the data, so why not have them in the room and say, guys, what do your patterns show? Where are the suspicious packages, which are probably 0.001% of the whole e-commerce traffic, and what should we target as customs from the security perspective, and then just free up more of the trade of the companies that are engaged in trade, are more legitimately engaged. So those are a couple of, just a couple of ideas, and I'm sure there will be others, but turn it over.
Thank you. Issue of security of data.
Yes, so the question was, how can the regulatory environment support better data safety and prevent companies from having their copyrights infringed and being hacked, etc.? I wish I had a good answer to that, but I don't. But I think on the policy level, this cybersecurity laws that already been enacted in the majority of East African countries is first step. I haven't been able to look into whether companies, both East African and also foreign, which probably want to store the data in East Africa, if they think they are sufficient enough. But I think that's the first step. But also I think the private sector, they have a market-driven incentive to have more secure data. So it's the service and also the technology they use. But at the same time, that requires capital investments in the technology, but also skills to have the people to know how to prevent data hacking, etc. So I think the issues that I raised, that investments, but also access to skills are key factors. And I would just want to add that this is a potential for East African countries to export more services. I mean, in the EU, this is an issue as well with data security. We have a EU directive which restricts all companies and government agencies to store personal data outside the EU because of data safety concerns. But the EU, I think it's a commission, they also have a list with a number of countries outside the EU that the commission thinks they have good enough data protection security in place for EU companies to store that. So if Kenya or any other East African countries can get to that level, that would create huge opportunities for firms in East Africa, of course.
Thank you. Alvin, do you have anything to add on the issues that have been raised so far?
I'll just add on the issue about cybersecurity. I mean, the issues, those are real issues, and they will not go away. They will always be there. So, I mean, it's like probably with the discovery, when Europeans discovered the new lands, they also, smart people became pirates, and high seas were dangerous, and that was something they lived with. So with cyber, with e-commerce, and us moving into a digital economy, those will still, people or institutions who want to use these systems either to carry out illegal trade, illegal things, those will be part of society. It's just part of who we are as human beings, I guess. And therefore, I think the challenge is not to be skeptical about the digital economy. Is how do we come up then with systems that help us to arrest some of this or limit the impact of this kind of activities, because those activities will continue. So the whole idea is, as any cybersecurity expert will tell you, it's just trying to be one step ahead of the hacker, who always sometimes is 2 steps ahead of you. So it's always just that ability to just keep on doing it, because they will not stop. And while a pirate may attack one ship, a cyber pirate can wreck so many things. So the investment in that security aspect is very important, that infrastructure to guarantee safety, integrity of data, because the pipeline or the blood of e-commerce is information and trust. That I trust what I'm seeing, and I believe that this is authenticated and valid. And therefore, a system that supports that has to be in place for it to work. And there are technologies that are coming, and I think it's a new space we are in, and every other day, new things, new initiatives will come. And as new initiatives come and new solutions come, other people who want to disrupt that will always be looking for ways of doing it.
Thank you. I'll have your comment and the lady, and then we here.
Thank you. Thank you very much for the opportunity. I needed to say something a little bit about data security and how we can begin addressing some of the critical issues that concern data security. And I want to very quickly draw a line between responsible data security and the typical breach of international conventions on on data security. Now, when we talk about these subjects, someone comes up and says, if I have published something and it's online there, and then someone comes and steals it and takes it away. He hasn't stolen it. You put it online, so it became accessible to the world. Now, when you look at international data conventions, which specifically deal with data protocols that have been set out internationally, that becomes a security threat where an unknown person deploys a data robot that comes and steals data. That's a breach, because it's breaching a specific protocol that has been set with an international standard. If someone goes through a small mail transfer protocol or go through a hypertext transfer protocol. These international protocols that have been set, and you need experts to come and go through those protocols and break the codes and be able to access data. But if you are traveling through an international airport in Istanbul or in Doha, and you walk into a cyber cafe, and you log on to your email, and do whatever stuff you have to do, open all whatever documents you have to open, and the next thing you hear is an announcement that your plane is boarding, and you run away. You haven't logged out, so you have not acted responsibly towards your own data. So once this data has been picked and used anywhere, that's not a breach of security. You have negligently exposed your data to access by anyone who wants it. Most of us have logged onto our systems, and because we are lazy enough, each time the system asks you and you say, do you want to remember this password? Each one of us says yes. After all, it's my computer. 2 minutes later, you abandon your desk to go to the little boy's room. When you get back, your security has been compromised. That is acting responsibly. So, and for the region, specifically for East African region, and I'm talking in the context of Northern Corridor with David, my friend, who we spend time in these meetings, we have set up Rwanda, Uganda, and Kenya have very robust CSATs, cyber security emergency response teams at national level. They have big data centers that are responsible to build walls against security threats that come into our gateways. To access the world, and data comes from the world to access our networks. And we've been discussing at a regional level on how to set up a regional CSAT, a regional computer cyber response emergency team, which helps in making sure that we have firewalls strong enough where this region becomes one security center, and you don't have any breaches to come and break down our protocols. So I'm trying to arrest the fear of this man and asking him to act more responsibly when he's exposing his data. Thank you.
Thank you. The lady behind there.
Thank you. My question is to Kati. First of all, thank you for the presentation. You said in your presentation, and I agree, that a big beneficiary of e-commerce has been services, sellers of services. And my question is with regard to traditional professions like law and medicine. I wonder what your experience has been elsewhere on the uptake of use of media platforms by these professions, because I know in the East African region, there's still some, in both of these professions, there's still very stringent rules on advertising, and e-trade goes hand in hand with e-advertising. Like, it's almost like it's a walking advert. So if there's a cap on advertising, then that's going to limit how much you're going to use these platforms for trade. So what is the experience elsewhere with regards to that? And then just a comment, I think also when we're looking at what needs to be done as far as regulation development is concerned, probably we should also address the issue of developing our intellectual property laws, especially in the East African region, because we also must capacitate our people to not only just use these established applications, but to also come up with tailored applications for the East African market. So if we're not going to protect the intellectual property properly, and if we're not going to develop laws that address the concerns that we're facing in this region, which is mainly, you know, IP laws that are drafted very open-endedly, they're not crafted to address the issues of the digital age. So perhaps that's something we should.
The gentleman in front here.
Thank you very much for good presentations by all presenters. I just have 3 small comments. One is on the development of a broadband of East African countries. What is the likelihood that if the technology develops to satellite communication, would these various cables laid on the ground, will they be obsolete, or if we can go wireless, what is the future of the various cables on the ground within East Africa? In addition to that, the development of 5G in terms of technology, artificial intelligence, and robotics in the development of industry. Would this technology have a likelihood that they could be brought within East Africa so that we can increase the efficiency and quality of products? And in terms of e-commerce fraud, a number of people, they buy online. What is the likelihood from the seller's country to have, for instance, a chamber of commerce to certify the quality of the product being sold? Because I know a number of people who have been conned. They have sent money to Europe, to Asia, to North America. They want to buy a car. The car looks fancy, but some of them, the seller actually disappears. And you go through Interpol and so forth, you can't trace him, and you have sent $10,000. Your savings maybe after retirement becomes terrible. A marriage breaks because the wife thinks you're crazy. Last but not least, value corridors in infrastructure. What's the likelihood of assisting pipelines to have communication cables and other anchor towns for development of other sectors? Because we have North Corridor in Kenya, we have got Central and South Corridor in these areas. Could trademark and ICTSD assist these governments to have a combined development of these infrastructures to include these subsectors, because it becomes cost effective and they utilize economies of scales, and you don't pay so much for the land. Thank you.
Thank you. Yes, okay, let me take two more, no, behind there.
Thank you, Your Excellency. Chair. I'm David from Uganda, Minister of ICT. Yeah, I thank you, presenters, for the enlightening presentations. But you know, the issues that are coming out are already the same issues that we talk about over and over. Like yesterday, we already discussed the issue of tax, e-tax. And these are very evasive concepts to the normal mind, because we are used to the physical world where you see, you know, a car or a computer. But e-commerce and the digital trade is it's abstract to many minds. Governments take interest in these issues because why, for example, the government of Uganda would be interested in promoting this? What are the challenges? You mentioned unemployment. Yes, we need more people to get employment. And these are the young people just being turned out of the universities. But also governments want tax, they want money, they want revenue. So the two cannot be divorced from each other. You'll be surprised that in a country like Uganda, the tax base is so small. I mean, things to tax are very few. There are very few big companies. The list of the top 100 taxpayers, I mean, that's probably where they get the money from. So they're looking to tax even very small things. For example, a woman selling mangoes with a market store, has a market store in the marketplace, and she has to pay some tax off her little stock that she has. So if you are involved in e-commerce and digital trade, the government also expects to get some revenue from you to increase the, because the challenges are many. We still have to build the schools, the infrastructure, and these other things. And then the government people I'm talking about they are the ones who cannot see this trade. I mean, it's not physical, so they cannot feel it. And they are very, susceptible. They suspect that something is going on that is probably favoring someone in America or in Europe, and not their own countries. So many of the policies we come out with and laws, we always recommend something like a tax waiver for this segment of people so that you promote and get economies of scale, then you can tax at some later date. But if you go to the ministries of finance, you find they say no tax waiver for this group. So you are defeated from day one. The idea you're saying that maybe, and I need this information, Madam Kati, you're mentioning how the United States and Europe have tried to ease access for us to those markets by giving certain thresholds. I wish it could have been part of your main presentation, because I need that information to be communicated. You see, the biggest challenge is that the awareness side of it. Not very many, you look at this room, none of us is an SME operator, probably. But people are talking about are out there, and probably their issues are much bigger than what we can imagine here. So the challenge for government is how this message can trickle down to to the intended audience, okay? And we don't seem to be tackling that. Again, to Mr. Henrik, maybe finally, when you talked about the policy implication, the issues, they seem to be the issues that come out of this region, that I've seen what this region needs to do. But also the external challenges, I mean, outside the region, what are those issues? I mean, we know protectionism out there. Other governments don't want, like us to make more money out of their systems. So how do we address those external issues? So for us to have a bigger picture of the problem. I thank you for giving me an opportunity.
Thank you. I'll take two more contributions, and then we can ask the presenters to respond, and we can then move to the next presentation.
Thank you very much indeed. My question is really about the political economy of the subject we're talking about. I think we've kind of assumed that governments behave in a rational, efficient way for the best interests of their population. Unfortunately, that's rarely the case, or often not the case, and not just in developing countries either. And obviously we've seen some pretty calamitous changes happening in the world in the last year in regard to the liberal trade agenda. So my question is, how important are governments and good governance to an expansion in trade and services, both as enablers but also as blockers? In other words, how big a threat is bad governance to the expansion in trade that we want to see, and what can we do about it?
Thank you. Gentleman over there.
Thank you, Mr. Chair. Mine is a contribution related to Henrik's discussion about services. And my question was, does it then mean, because like Alban said, we as East Africans, as Africans, have been at the forefront of leapfrogging. Does it then make sense for us to shift focus to a situation where we're pushing services as a region mostly, because then it takes care of a lot of the infrastructure challenges that are coming along with the aspect of goods transfer, roads and the like. We would then only have to focus on internet, making sure that the internet is sophisticated enough. Why I say this is, for example, if you take an example of the business process outsourcing industry, it's estimated to be worth about $120 billion. As an example of comparison, the total East African budget for all the 5 East African countries for last year was $50 billion. That's about 33% of the total industry that is BPO. Would it make sense for us then to focus our energies on ensuring that this particular area is improved so that we can reap the benefits of that? Then the second one was in response to someone asked a question about services and advertising. I do happen to work with the East Africa Law Society. We are the lobby group for lawyers in East Africa. And while there are still some very draconian rules on advertising across the region, they are being worked on to kind of make sure that they allow for our members to advertise. But I can see examples of service industries that have transcended the rules within their communities by going online. I think there's many of you have seen, there's a company called Miramani. It does architectural plans, and they sell them online, and they're making quite a killing out of that. Then for the legal profession, people have taken out LinkedIn accounts where they then post articles, become thought leaders within their areas. And while that is not necessarily straightforward advertising, when someone reads and knows that you know something about a certain aspect of law, they are more likely to contact you than if they don't know you at all. Thank you.
Thank you. I'll ask the presenters to tackle the issues that have been raised, starting with the last issue that I think luckily has been tackled. This is e-commerce in relation to traditional professions like law and medicine, and then issue of IP protection, and the issue of how easily certain infrastructure can become obsolete, and what happens to that sort of infrastructure. And then thirdly, how do we ensure the quality or security of the goods that are being traded across the internet? And then there was a question on revenue collection, that it is important to still collect revenue from these transactions, how that can be done. So feel free to take up any of the issues, starting with Kati.
Well, thanks. These are fantastic questions, and I don't claim to have answers to all of them, but I guess we kind of addressed the advertisement issue to some extent. My philosophy is everything is going online. Whether it's construction or law, medicine, and so forth, it's just a matter of time in different industries and different regions, and it's just going to happen, and people will find a way. If they are enterprising, they will write articles and provide content that is useful for users, and then attract traffic that way, and bit by bit we're going in that in everything. And I would imagine that, for instance, these online platforms that have, some of which are for very high-end professionals, that would enable, indeed, like women who are lawyers to sell their services there. Medicine, I don't know, there's probably a lot of regulation around that, and of course you have different certifications and licensing and so forth across countries. So there could be some frictions there, but I would imagine people are tackling that as we speak. On the on your other thing on IP, huge issue, right? I mean, it's everywhere here. It's in goods, in services. You think about things like 3D printable designs, which is a huge area for IP lawyers. If anybody goes to law school, go in that. It's going to be a growth sector for a lawyer. And I think it's, in the US at least, it's being sorted out with case law. You're starting to see more and more cases being brought by companies that somebody infringed their IP, 3D printable design IP and so forth. And it's quite easy to actually get that IP. Even from the sound of the 3D printer, you can steal the design. It's incredible, this stuff. So I think it's going to kind of evolve with case law in those countries that have that kind of legal practice. And then, of course, we want to be fair for the little guy and allow innovation. That's what I worry mostly about. If we don't have this kind of fair use where small businesses and entrepreneurs can just experiment and are being hit by large multinational companies, that's that can freeze a lot of positive innovation as well there. So those are a couple of thoughts. And on your point on these cables and wireless, maybe Alban, you know more about this. I don't know the specifics in this region, but if we can leapfrog some of the cables, that might be, perhaps you have better.
The ICT authority is actually allowing broadband companies to take some of that white space away from, when they spare spectrum
Yep.
for the TV stations, right? the TV stations don't use all the spectrum that they're allocated. There's always some. Yes. So they're allowing people like IBM and Microsoft to take that and make that into broadband, right? So that's going to leapfrog the whole optical cables and fiber optic and everything, because you've got all this other spectrum that's actually not doing anything, and they're giving it to the rural areas. I'll give you a perfect example. I was with a Microsoft executive, I think a few weeks before Christmas, and they've rolled this out in Mount Kenya, in the Nyeri area. And there's a little graduate guy who graduated 2 weeks before with a physics degree. He couldn't find a job, very good grades, and now he's using that broadband to teach students in Europe. He's offering tuition and getting paid from Nyeri, you know? So I think that opens up a huge area for self-employment for the youth. So I think, yeah, let the broadband go and the optical cable go in the urban areas, but in the rural areas where it might not be economically feasible to roll it out, let's just use the white space.
Thank you. Henrik?
Quickly on intellectual property, I would say that's the problem of IP law not catching up or keeping up to speed with digital technology and developments. It's an issue everywhere, in the EU as well. When Netflix was launched in Europe, it took years to figure out how will the rights holder get access in all of the EU. I think still they need to apply for the rights in each EU country. So they can't sell these video streaming to the whole EU market. They need to do it country by country. So it's an issue everywhere. On the issue of fraud, I don't have a good answer, but I think e-commerce does offer a part solution thanks to the use of user reviews. So the fact that thousands and even millions of users that do buy things online, they can put a review whether it was a good experience, a bad experience. That at least reduces the risk of these bad guys who only sell fake goods or goods that are not as they are advertised, are weeded out. It doesn't solve all the problems, of course. Lastly, on my colleague Richard's question on good governance, is it important for e-commerce? Yes, just like in all types of businesses and for private sector as a whole, it's important. But I think e-commerce can also be a tool for improving governance in countries. So I know in Kenya, the e-government initiative, I think it's called, where businesses and people can apply and pay for licenses, permits online, etc. It doesn't take away the whole problem of corruption and bribes, etc., but it at least reduces the risk. So e-commerce can be a way to increase transparency, access to information, and reduce corruption. I think that's it.
Thank you. I'll invite Alvin if you have any comments. Briefly.
Yeah, just briefly, maybe one or two. One on the whole thing. I mean, we've talked about a lot of it, and that's the issues around IP and copyrights. I mean, right now, Lego is dealing with a huge problem in China on copyrights and intellectual property violation. So the second biggest economy in the world can't manage things like this, and probably Lego is a big company that is able to do this. There are many other smaller companies or even bigger companies who have just let it go, but it is a big problem. And of course, in the digital economy, it will still be. But the whole thing is, I think, and as he pointed out, is also the people who are moving into the digital space, small businesses, and I think that's where sensitizations become important. They should be aware of their responsibilities. So don't put things online that you have not patented, for example, because then it's your responsibility to do that. Otherwise, you'll learn it the hard way. it doesn't guarantee that if you did that, no one will violate it. So probably through international conventions, those will be mechanisms set in place to try and address some of those challenges. But of course, it doesn't eliminate the problem that there will be people who simply aim to do that. But having probably 10% of people who want to do that should not defeat a noble cause as this, for example. And then the final thing I would mention is there's the issue about whether we should really just invest in services at the expense of goods due to the cost of infrastructure. I think this region, where we are as a developing region, trading in goods will still be a very big component of what we trade, because just that's where we are as a region. So we will probably be trading more goods still, but of course services will still come in. And even if we are trading in services, we're human beings, we need goods. So you need food, so you have to get those things still as well. So I think that investment still has to be done. I think what really needs to be done is have our governments do it in a smarter way than what they're doing currently. Because if you look at some of the challenges, whether they are those logistical issues, sometimes it does not boil down to actually investing in a $10 billion infrastructure. It probably just looks at addressing a process, which probably may cost a couple of millions of dollars, and you've actually solved a big problem. So I think it's how the policy people look at it and in a smart way, and they come up with innovative ways of addressing that. Because it's not building a super highway that then brings in efficiency and better logistics. It's probably how you help the businesses to network, to connect, and move on the infrastructure.
Thank you. I'll give Kati some 3 minutes. Actually, the one to do with revenue collection on e-commerce transactions.
I don't know what to comment on that, but just a couple of comments to wrap this up. Wonderful discussion, first of all. Thank you all for being so engaged, and I learned a lot. This is kind of one of the first times that I'm in this region, so learning a great deal of the concerns that you have. And I think this is really a historic opportunity. As we look at the world economy and we think about all these industrial revolutions we have, and this is really leveling the playing field now. Everybody has an opportunity here. So I'm really glad to see such enthusiasm here as well. And in many ways, it's just, as I've been talking to players in this space, it's for government to get out of the way in many ways, that once entrepreneurs learn a little bit to do this, there is enough entrepreneurship. I think that once you have this environment where you have the freedom to explore and work on this, I think a lot of things can happen, and this is a very enterprising country and region overall. Just on the services issue too, I'm not sure we should be, as a kind of policy, picking winners with the services and goods. That necessarily is not the best thing to do, but clearly great if you're a landlocked country, a lot of challenges to getting from point A to B physically. Service is a wonderful way to go, and what I would highlight is there's a great link, of course, between services. So if you have more online services, say payments, logistics, online lending, any kind of services, those then facilitate goods commerce as well, and provide tools for the little guys that are engaged in e-commerce in physical products. So it all goes hand in hand. And overall, what I'm starting to see is that we just have to rethink this. We have to kind of change the modus operandi, how we do policy. And it's so much up to the private sector now to highlight to governments what are the positives coming out of this economy, provide examples, provide data, and show how powerful this is for small businesses and entrepreneurs to do business. And it really is an educational challenge. And then furthermore, to have these dialogues, countries that I've looked at as the most successful ones in this area have had very good dialogues between the public sector and private sector with the public sector learning what the private sector thinks about the challenges. So I think it really is critical. We just can't make these rules in the abstract. So that's what I would kind of leave as the final word.
Thank you very much, and thank you to you all for the engagement on these issues that have been raised this morning. And of course, we have been able to identify that, I mean, these transactions are transcending borders. You know, there are transactions across borders, within territories, and so forth. And therefore, there has to be some framework at an international level on how these transactions must be governed. And also, we have to be alive to the fact that there are many organizations that are specialized in different aspects that touch on e-commerce. You know, for instance, we have the IPU, you have UNCTAD working on some of these things. We have the trade aspects with WTO. How do we get to harmonize all these organizations in order to support the furtherance of e-commerce? So we take opportunity now to listen to some of negotiations that are happening at an international level. And I invite Andrew Crosby. Andrew is the Managing Director for ICTSD. Andrew, you have the floor.
Okay. Hi again, everyone. Let's see. What are we going to do? We got about half an hour or so before lunch. And what I would like to do is part update, and I'm going to go rather quickly because I'd like to hear comments and questions from you, particularly comments if you have them, but questions as well. So we started out with the day going through some global trends and regional ones. And then I want to bring us back to what's happening at the international level, where some of the same issues are coming out, same ones we discussed, but they're coming out a little bit differently. So I'd like to tell you about those. So right now at the WTO and for the past year or so, there's been very intense interest among a number of countries, actually quite a lot of countries. The politics has been some same, some different. And we're addressing many of these issues, and there's, as I said before, there's some kind of a disconnect between what people are saying in Geneva and what they're saying in capitals, and some of that is just communication, some of it is lack of understanding of issues, and so on. So we're in this process of discovery. So what are people asking? Because I want to start there. I think this is where you start, which is how do economies best innovate using digital commerce, e-commerce? How do you develop new industries and build skills? What kinds of rules can help do that? How do you ensure level playing field? And how do you attract investment? And how do you use foreign investment, particularly when some of those foreign investors are giants, right? And where they are potentially threatening. How do you deal with a real big asymmetry using those foreign investments to build national and regional capacity? How do you manage jurisdiction issues? That came up here this morning. So if things are moving and flowing across borders, how do you deal with things like intellectual property? And how do you deal with, for example, where all of a sudden the rules have changed in terms of how information is flowing, and how do you ensure that you have a possibility to actually enforce rules around those things? How do you build skills? So there are all these questions are coming up. Just a little bit of background. So a lot about e-commerce already exists in the WTO. So WTO has the GATS agreement, and the GATS agreement has a number of provisions. GATS is about liberalizing trade and services, but not only liberalizing. GATS is an instrument that helps countries identify how they want to liberalize. And as part of GATS, there are rules about data flows. Actually, one of the hot issues of the day are in GATS. But one of the big drawbacks of this agreement is that it has a lot of protective measures, but it doesn't have a lot of these kinds of things that actually build market confidence. Some of the things that we're talking about this morning, where people are concerned that if they operate in the market, how do they know that the consumers are protected? How do they know that transactions will be secure? Those kinds of things. And so some of those are the issues that are coming up in WTO. How do you set a framework to ensure that that might happen better? In WTO, there's also something called the e-commerce moratorium, which is something that's been kicked along for more than a decade and continues in force. It's an agreement by members that they won't tax online transactions. And this continues. But this is one of the only main things that have been done inside WTO for the moment. Now there are discussions around how to advance services and services trade, including around professional services. Another discussion here this morning. And there are incipient discussions about how to strengthen countries' abilities to recognize and and report on what their qualifications are around professional qualifications. So let me just go into a little bit about what's happening there, but also note that outside of WTO, you all know that there are many other things happening, including the market. We just talked about the market. There are bilateral agreements happening between many countries, and many of those bilateral agreements are really quite advanced. So the things that are happening at WTO now are, by and large, the ones that are looking politically viable, let's say, are those that are focusing around what you would call facilitating measures. So again, many of the same things that we talked about. I won't dwell on them, but there are things like single windows, things like transport of small goods. So how do you ensure that small goods and people who are using platforms or electronically enabled commerce can actually move the goods efficiently in a way that's not going to cause too much transaction cost? How do you improve customs? How do you, could you do something with de minimis and raising this de minimis level to ensure that goods can move across borders without any tax at all? Things around e-signatures and e-documents. Agreements, that part of that discussion is, and it would be a simple one in WTO. It would just say something like all members agree to ensure that trade-related documents recognize and countries recognize e-signatures or e-documents. This is how it would be done at WTO. And then it would be up to countries to use the means that they found best adapted to do that. So this is an active discussion and one that many people think could make the flow of commerce much, much more fluid. And then there's the idea of transparency, of simply making and reporting on how different countries are actually enabling the e-commerce environment in their own countries. And those are proposals that countries would simply report into the existing processes like the trade policy review mechanism that each country goes through to actually report on as part of that process, how are they doing related to e-commerce. There are some things that I would call hot topics, and they're in the background, and I'd like to mention them. They're being dealt with actively in regional agreements and bilateral agreements, not as much in WTO. And there are things like data flows and localization. And that's a big discussion that's going on internationally, whether countries should require localization of data as a condition of operation in the market. It's a fairly blunt instrument, and I think it's well recognized that it may have really negative side effects, including high costs. But one of the problems is that there aren't a lot of other alternatives for many countries. So there's strong, let's say, agreed alternatives. So there's a strong desire now to find out what can you do other than this blunt instrument of data localization. Is there some way around this? Do you have, as Kati was mentioning, a trusted trader program? Or do you have mutual MLATs, mutual legal assistance treaties? Do you strengthen those? Do you have things like APEC has, which is an agreement on data privacy that enables companies to pre-qualify on their data use? These are all the kinds of structures that might provide more market confidence that really is lacking, and that forces many players to want to push data localization. There are many other things also. Intellectual property and the issue of intermediary liability. So it means, you know, if Google or someone operates in your market, what are they liable for? So there are a whole range of issues around copyright and IP. I won't talk too much about that. Let me just say that things also like expedited visas and movement of people, services, are also critical issues, and I'll come back to that in just a second. But let me go, what are the politics that are happening right now? And the politics are very interesting, and East African countries are part of that politics. So let me just give you a little oversight into what's happening there. Recently, a group of countries that are known as the Friends of E-Commerce for Development has formed. It's not a negotiating bloc. It's a group of countries that are interested in having more discussion about this topic. And they've held a series of seminars. They're not the only ones, but these include like Kenya, Pakistan, Costa Rica, Nigeria, Sri Lanka, Argentina, and there are others joining. And what these countries are saying in terms of the negotiations is we should be having these kinds of discussions around e-commerce in the WTO in order to advance understanding and perhaps negotiate new rules. But they're not allied on which new rules there should be. So it's a very interesting time where the traditional developed country politics are being challenged. Nonetheless, there are still big issues related to the delivery on the Doha round. And there are a number of countries that have problems with commencing in additional negotiations when some of those Doha round negotiation deliverables have not been delivered. The biggest piece of that is on special and differential treatment, which is a major concern, and it's a concern that runs through the WTO. So in negotiating terms, what's happening now is that some of that tension between those countries is resulting in some conversation in WTO, but some of it's going outside WTO. One of the pieces that went outside of WTO is known as the TISA agreement. That was an agreement, and it's still let's say on deck, but a little bit cool now, was to negotiate around services among a select group of countries. So we have this constant tension and pressure between what countries feel they need to do to solidify and stabilize their markets on one side, and what they need to do to try and create a level playing field. What are the negotiating options? The negotiating options are still as yet undefined, but they range from strengthening what's known as the Trade Facilitation Agreement, which is about to go into effect. It's missing just a few signatures. Strengthening something like that to doing a standalone agreement. So this is still undefined, but there's some really different negotiating perspectives, particularly among the major members, which I think are quite interesting here. For example, China is forwarding a view of really focusing on goods, specifically on goods and digitally enabled goods. And in their view, what you need to do is this is something that's of interest to everyone in the market, all of the WTO members, is look at how you can take some of these trade facilitating measures that I talked about earlier and really make them work easily. And look also at some of the services sectors like transport services, or it could be telecommunications, and understand how you can use those to really empower the goods trade. You have others like India, and India is now participating in the negotiations, a big change from before. Particularly on this topic. India still wants movement of people. They want to be able to have their people cross over borders, But India is also concerned about something that I think is also of concern to East Africa. India is concerned about ensuring that it can get access to foreign markets and that the data regulations are not too high. It's particularly concerned about Europe, but it's also concerned about other major markets. And as major markets in the recession that we're in now start to sort of pull up the drawbridges to some extent, and you're seeing this happening in the US already, one of the concerns, particularly for smaller countries, is can we lock in the market access that we have to these larger economies to the extent that we think that's important for our future. This is a very interesting perspective because it's one that is not necessarily a traditional one at WTO, but it's one that is now coming in, and it's very interesting to see that a major economy like India is focusing on this. Let me come to a close. So there were a number of really interesting ideas this morning, and I think that one of the challenges that we have is to figure out how to enable those pathways in regulation, and doing nothing is an option, but doing nothing means that the world moves on without us. So there's a downside to waiting and there's an upside to moving, and I'm very happy to hear about the things that are happening here in East Africa. And actually what I would like to hear more in the coming sessions is how are you responding to things, some of the things like Henrik presented, some of the regional coordination mechanisms, are they working? Are they doing something for you? So at the WTO, there may be something that will do something for you in creating a more even playing field, and definitely could help fix the environment for many of the topics that you're talking about, but it won't probably build the kind of competitiveness that we talked about this morning, but it may help stabilize the environment. So let me stop there and just invite any questions, comments, critiques. Thank you.
Thank you. Any comments? Gentleman over there.
Based on your presentation, thank you very much for it, first of all. My question is, what do you foresee as the impact of the re-balkanization of the world? We've seen Brexit. We now have Trump pulling for America first. What do you see as the impact of that on the progress of many of these trade negotiations, but overall also on the progress of the work towards advancing a digital economy across the world?
Another.
Mine is something almost similar to what he said, but maybe framed in a different way. As the whole world moves towards moving from traditional businesses that they have relied on for many years, especially for production of goods for export, to moving into the digital business environment, how does the new administration in the United States look at trying to get traditional businesses back into the United States as opposed to promoting innovations that promote technology into businesses and into innovation, so that defines their new trading lifeline? Because when you look at getting manufacturing companies from Mexico back to United States, it doesn't necessarily mean that that is going to make America great again, in my view. Instead, that is going to discourage innovation back home, because people who would have been innovators of technologies of tomorrow will lay back and look at jobs coming back from Mexico, and so they don't have to innovate and they can go back to car manufacturing plants and all these other traditional businesses. I wanted a context on that. Thank you. Oh, and this is to Andrew. And then to Kati, if I can get your presentation after the meeting. Thank you.
Thank you. Any other contribution? Okay, Andrew?
Those are great questions. Thank you. From the ICTSD point of view, I think we, and I say it that way because I will give you a personal point of view as well, but it's very challenging, the balkanization, if that's happening, and I think there are many indications that it is happening, and that it may continue to happen. And that is very challenging, particularly when we depend on a global system with predictable and transparent rules that enable smaller actors to participate. So having a single system has a big value. So it's very difficult. Is it the worst thing? Well, we don't know. One of the things we know is that in any case, the specifics of different countries and different regions have driven different solutions. And part of the sustainable development solution is, well, different countries and regions do have different needs. So part of the difficulty of this, and part of it's inevitable, but maybe we don't know how far, is how do you fit these differing specificities and differing interests into a global framework in a way that the global framework maintains its integrity, but regional groupings and regional and national interests can still be pursued. But I think it's a very difficult question. If the trade wars, if we get into trade wars, if there's really a significant erosion, then I think that we're back in a place where we need to again start to make the trade-offs that are happening through those decisions much more explicit and much more real, because they will affect people. So it goes from being a policy issue to a everyday issue that people live with, and that's a job for all of us who are in this world. More from a personal perspective, how do we, so does that make sense? It doesn't make any sense whatsoever. But there are a couple things to say about that I think are interesting. One, big countries can do things that small countries cannot. So the major economies of the world can effectively close their borders and still operate. When you look at the U.S. exposure to trade, the percentage of its economy that's trade exposed, it's relatively low. That means that even though it will hurt U.S. trade in the first instance, the U.S. could probably do it. It would do exactly as you're saying. It would displace investment towards things, away from things that are related to innovation and creativity. The other thing that is even more important that it would do, however, is assuming that the trade partners react, it will actually start disrupting the global supply chains and regional supply chains. And for all economies, including increasingly the East African economy, that ability to take inputs and to participate in processes is increasingly important. But this is very much so for the United States as much as everyone else. So and we don't, I think, still, there's a lot of good research going on this, but we still don't know what would be the economic effect of pulling these things back. How big an impact would it be? We don't really know that. I don't think anyone has modeled it in a way that we can understand. So we have to stand by. But it is certainly bad economics from my point of view, but worse, it actually imposes not only costs on, in this case, American citizens, but it imposes costs on the rest of the world. So maybe that's enough said from my personal American perspective. So maybe, yeah.
Just jump on that a little bit, and if I'm an American company and I'm kind of forced to repatriate or encouraged to do so, I personally just have a hard time seeing that you would have, manufacturing companies employing all these people. Again, the leading driver, and most of you know this, of this hollowing of the American middle is not trade. is not companies moving overseas. Yes, we have shown that there's quite a bit of impact from imports from China on American workers in the kind of middle class workers, but technological change is the leading driver. So companies coming to the US going to use robotics to assemble products. Yes, that will disrupt supply chains, but for a different reason. And I don't necessarily see how there's a giant jobs campaign by virtue of those kinds of policies, unless you have labor and capital, right? You have capital going to technology, or you have capital going to labor. If you tax capital very high and innovation very high, then companies will hire labor to do the same thing as robots would have done. So you do have those taxes or incentives to play with those two things. But those are the things that companies are looking at. I don't necessarily, in the US context, living there and working there, I don't necessarily see that companies would hire workers en masse. Maybe it is the employment gains would then come from the infrastructure investments if those happen and so on. So that's just a personal note. Maybe you have some.
Let me just to bring it back home, because I think that part of the implication of that is in East Africa, you have work to do because your closest trade relationships are here. And I think it means that focusing on those close relationships, the ones that you are most dependent on, is extremely important. And getting those to a place that is minimal friction and maximum dynamism will benefit, it will have direct benefits. And if it can connect into the larger world, all the better, and it must do that. But the focus, there needs to be a focus at home to keep that moving.
Thank you, speakers and participants for contributing on this topic. We shall continue our interactive discussion after lunch. We shall resume at 12. We shall resume at 13:25. So I invite you to collect your voucher for lunch, and then we reconvene at 13:25 to continue the interactive discussion. Thank you.